Good morning, traders. Welcome to your 7-minute market update, utilizing technical analysis to predict direction based on human emotion. Today is February 23rd, 2013. Lots to talk about, so let's get started. Alright, first of all, I want to say thank you very much for all those likes that people are clicking, and thank you very much for taking out the time of your day to watch these videos. This video should be fairly quick. I know I always say that, and it ends up being half an hour, but I really don't have much time because I have to get ready to go out. But here's the thing. Um, there is kind of a bit to talk about, so hopefully I can get everything in as much as possible, as fast as possible. This is the chart of the SPY, which is the ETF that tracks the S&P 500, in case you didn't already know that. And the reason why I do my analysis on the SPY is because we can monitor volume versus watching the S&P 500, of which we cannot. And the SPY is a traded ETF, and S&P 500 is not. So that is the reason, in case you newcomers are wondering about that. Next thing I want to talk about is what has happened this past week. Basically, it was Monday the 18th here. Monday was a holiday, obviously, so it'd be Tuesday the 19th. We almost got into this 154.10 level here. We got pretty close. Now, again, the way these mathematical calculations work are simple. If the price gets into it, that's when I would initiate a short or a long position, depending on the pattern, obviously. In addition to that, so it's first of all, it's not guaranteed that it's going to get to the price, but if it does, then that's when I decide to initiate a possible trade or not. In addition to that, the trade could also be intraday, multi-day, or a gap up or gap down type of trade. So I just want to make that clear for those of you who just started watching. Okay, but here's the interesting part, and I've done this analysis in other videos. These are the one-off type of things, but I kind of want to just show it to you guys. First of all, we also have this 149.51 level here on the bottom, which is a support level, and then we have this resistance level up here. This 149.51 level was holding up pretty well. It actually broke through, and then it started bouncing right off of this 149.51 level, which shows a pretty good support level. We come all the way up close to the 154.10. When I say close, it wasn't necessarily that close, but it was pretty close as far as visually looking at the chart. As it comes down, it comes close to the 149.51 before we get a substantial bounce on Friday. If I just get a line from the 154.10, and I normally do not do this, but it's interesting to see because this has happened multiple times, and I actually might start making trades based off of this, but I still have to monitor it. It hasn't failed yet, but then again, at the same time, it's hard to determine what may or may not happen. But if you bring, it came all the way up to the 154.10. If you bring that gap difference down here, then you could actually see that the trade could have been taken at this level here before we got a pop on Friday. Okay, I didn't myself. I haven't taken this trade myself. I actually took a short trade around here, as indicated in my previous video, just because we're in an oversold condition. The dollar was indicating a reversal, and a bunch of other things that I took the trade on. So I'm sitting pretty in money right now with a break-even stop. At the same time, I could easily get stopped out next week. Now, keep in mind what's going to happen is we've never had a fall this hard for a very, very long time. You see that? There's never been a bleed out this badly for a very long time. We closed below the 20 moving average here, and what that shows me is a little bit of weakness, but at the same time it also shows me that because we didn't validate the next day by closing below this candle here, below the low of that candle, into this 149.51 level, there's a possibility that we could head lower. Now, the way I will play this is simple. If we close above this, of the high of this candle here, actually the high of this candle here, and I may actually validate it with another candle closing above that candle. So let's just say we close somewhere around here, and then the next day we close above the high of the previous candle, then that tells me that we're probably heading for the 155.44 level, and then I'll stop out and I'll wait for that level to hit. Okay, so again, right now I'm in the money with a break-even stop, because there's no reason why I should be losing money if I'm already in the money, and that's something that I always tell people that there's no reason why you should not be making money if you're already in the money, or there's no reason why you should be losing money once you're in the money. Okay. Now this candle here was not an indication of a reversal. In my opinion, this candle is not a reversal candle. It wasn't after a 3-day down move, so this may not even be considered a pivot. I was waiting for another day, hopefully to be into the 149.51 level, and on higher volume, and then that would have indicated a pivot. But this down move here also happened on higher volume, and the volume, as you can see, is low, it's going higher, and it's going higher. That validates this move down, which means that this could simply be somewhat of a pullback, if you will, before another move, possibly down to the 147.05. That's actually what I'm waiting. If price here's the thing: these mathematical calculations, again, is if price gets to it is when I make a decision to go long or short. If price gets into the 147.05, then I may consider taking a short. Ultimately, if it can get into the 145.07 level, then not a short, I'm sorry, a long position. Ultimately, if it can get to the 145.07 level, then hands down, I don't care what the pattern looks like, I'll probably take a long trade. But maybe I'll take that back. Pattern is everything, right? I mean, we need to follow our rules. So ultimately, if we bleed out into the 145.07, meaning we go straight down into it like we've been going straight up, then I'll probably take a long trade on that, because that's a nice gap window here. We got a pivot point over there. And then there is a possibility that we could actually bleed all the way into this gap fill over here, but that's not too far away down. So, the 145.07 would be a nice spot, in my opinion, to go long. Now, I don't even know if it gets there. I mean, there's a potential that we might come down, right? And this bounce on Friday might continue higher into the 154.10 level. But again, once price gets close to a level, I'm probably going to stay away from it and wait for the 155.44 level, unless of course we get some kind of doji reversal candle around the 154.10 level on high volume, in which case I will reshort the market. How does volume work, in my opinion? Simple. You have down candles in volume and then a spike. That indicates a reversal, in my opinion. You have, like, over here you have up candles. You have candles that are going higher and higher and higher. That does not indicate a reversal. That indicates a confirmation in that price is doing what it's supposed to. Let's see. We have something like this is a good example where you have candles that are going down, and then you have a spike here in this candle here. Now this isn't a reversal pattern on the candle chart, but as you can see, price did reverse. Okay, so it's got to go down, 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 and then bam, you get a spike. It's not up, 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 and then bam, you get a spike. That confirms that. Just like going back to the eBay example, if you have a watch for sale, if you see a watch on eBay for sale for $100, but you only see two people selling it for $100, you can pretty much tell that, oh, okay, maybe this watch is going for $100. I don't know, right? Who knows? You buy the watch, next week you see somebody selling it for $20. Oh, you know what I mean? It's like you didn't really do your due diligence. However, if you go to eBay and you see 100 people selling the same watch for $100, you can pretty much be sure that because so many people are selling the same watch for $100 or for the same price, that price of that watch is probably worth about $100. Versus only seeing two people, and the volume would be, low volume would be just two people, and then obviously higher volume would be 100 people selling the same watch for the same price. And this is actually indicating, based on volume, that the price is validated, and that's why the market keeps going higher. Now this pullback could also mean that we were in overbought condition, which is what we talked about in the previous video. Obviously the markets were in an overbought condition, and I was waiting for a reversal pattern. This candle here was an indication of a reversal pattern, okay, and it did happen on higher volume, but it didn't happen on higher volume from the past 3 days. Okay, this volume here kept me from doing a solid short. What I mean by that is my normal shorting positions. Right now I entered a short position, but it wasn't my normal amount. Okay, I cut it in half, and that way, even if the markets went against me, I'll just get stopped out break even anyway. But before that, I didn't know the markets were gonna go my way or not. It was just I was just basing it on what the charts were telling me, and therefore, if it did go against what I was thinking before I was in the money first, then my losses wouldn't have been as great as if I went in with a normal order. All right, so let's move to the dollar. All right, taking a look at the dollar here. The dollar movement was pretty interesting. Let me just load the drawings if there's any drawings in here. All right, so in any case, we talked about the dollar breaking through this upper trend line here. We needed a validation candle, which was the next day, which is here. We closed above the high of this candle here. Actually, the high of this candle here, which obviously indicated that that this breakout was validated. Okay, basically. Okay, and this candle here did it on a little bit higher volume, which also gave another hint, but it wasn't enough for me to say, okay, this was a breakout because we didn't actually close above here, above the upper trend line. However, because we validated it the next day, we had a pullback. Just like after any breakout, we always have a pullback, which is the previous resistance level. This was the previous resistance level here, and after you get a breakout, it's common to see a pullback into the old resistance point, which is now going to be support, right? And then boom, the dollar just spikes higher, which is why the markets dropped. Again, the dollar is inverse to the markets, and this is a common thing to see, that if the dollar goes up, the markets will go down, and vice versa. This level here, the 81.26 level, this level here was a used and abused level that I made back in September 20th. So of course, we're not going to expect that this is going to be a multi-day pullback on the dollar. Instead, we hit the 81.26 level and we have an intraday pullback there. The next day we break through, but we did not validate it by closing above this candle here, which is this candle's high. So what we need to see is a close above this candle here on Monday to validate this move. However, keep this in mind. This is the cool part. We had an intraday pullback here on the 81.26. We break through, and then the next day, the 2 days later, we come all the way down into the 81.26 level. In fact, the low of this candle here, if you look up here where it says L, the low of this candle here is what? 81.26. That's right. An intraday trade of 81.26 went all the way down here and then had a nice clean bounce in the intraday. Would have been a beautiful trade. This level here is still holding up, but as more times it gets hit, it doesn't hold up as much, meaning it's not as strong. Okay, or I don't trust it as much. But this is not what it's about, trading the dollar. This is what it's about, is trying to predict what the market may or may not do later. Okay, now the market has already broken, or the dollar has already broken through this double top here. Okay, but this double top is giving this dollar a lot of pressure. I also don't see volume behind this last candle over here, so we need to watch that there is a potential. We have all this consolidation over here. There's a potential. Oh, look at that. I just drew it just live here, and already the dollar is right into this consolidation period here. I think the dollar is going to get some pressure, which is telling me simply the fact that we may get a slight pullback, maybe back into the 81.26 level. But again, the 81.26 level is not going to be as strong. We may get a pullback all the way down to the the $80.61 level. That's a possibility. But once we do that, here's the key thing that you want to keep in mind here. We've created a new high. Okay, we're still going sideways. This is still a dollar sideward pattern, but we have made a new high here, and we're trying to break out of this consolidation pattern here. So once we break away from this upper line here, then you can pretty much be sure that the market should be falling from there. If not, if we continue down and the dollar continues down, then what that just means is the market is just going to continue higher, because the dollar's inverse to the market. So it's very important that you watch the dollar. And all right, let's just take a quick look at the XIV. I know that Freddie was asking me about this before in the past. I think it was XIV. Anyways, I don't see any messages in my inbox, so I just wanted to bring this up real quick. Again, I just wanted to show you guys that these mathematical calculations are not 100% perfect. They never will, and I would always tell you right now that Nothing's perfect in the stock market, okay? Nothing's guaranteed, but they come pretty close. So this 23.79, unlike the other um, mathematically calculated level in the dollar, where it was to the penny, this one was not. So just keep that in mind. It's not perfect. It was 23.79 was a level for the XIV, but we did get a nice pullback on it right into this double bottom here and this 50 moving average. I would like to have seen it come all the way into this 50 moving average and the double bottom. Preferably, I would have liked to seen it come all the way down to this level before getting a bounce, if a bounce at all. We still have this gap window over here that needs to be, kept in mind. So again, there is a possibility that this guy might come down. This might just be a fake out bounce before heading lower. Okay, so just keep that in mind. But it's nice to see that the 23.79 level held, and that's the kind of stuff that I like to see. These, I was mentioning in the previous video that for the XIV, these mathematical calculated levels are the data that I got for it or to create it wasn't as solid as I normally like to see it, which is probably why we didn't get a closer number. In fact, the high of this candle was 24.17, so that's kind of off in my opinion, but just looking at the chart, it doesn't look so bad. Anyways, I'm into 16 minutes. I have to go and get ready. It's very early in the morning for me, but I have to go out somewhere very early. But I hope this was enough information for you guys, and at the same time, it's great to have a video that's less than half an hour. So in any case, you guys have a good weekend. God bless you all. Good luck to your trading next week. Thank you very much for hitting those like buttons, and you know, have a great life. See you in the next video.